I'm Charlotte McLeod with the Investing News Network, and here today with me is Will Rhind, CEO of GraniteShares. Thank you so much for joining me online today once again. Great to see you.
Great to see you also, Charlotte. Thanks for having me.
Of course. So this is our first time talking in 2022. Actually, it's been a few months since we had a chance to speak. And of course, a lot has changed in those months. I think to start off, we should touch on what's going on in Russia and Ukraine. Obviously, there's still locked in conflict over there. This situation is changing quite quickly, but I want to start by talking about the impact on gold that you're seeing. We've seen some quite big ups and downs in the price over the last couple of weeks. Do you think that's something that's going to continue moving forward?
Well, gold's had a really decent rally, probably unexpectedly to some degree over the last sort of few weeks. But this whole crisis in Europe, obviously largest land war in Europe since 1945, has really brought back the fear factor, and that I think had been missing from the gold market. So although gold prices had started to creep up on the back of the inflationary pressures that we're seeing all over the economy, we hadn't really seen that fear factor in the market that we'd seen since COVID really started in the beginning of 2020. So, really that has, resulted in gold going to the highest price that we've seen since that high in the summer of 2020. And that's really on the back of, this fear of what's going to happen next, specifically with Russia and Ukraine. But certainly a sort of a buy or a bid for safe haven assets, and gold is as usual, nearly at the top of the list.
Right. And so this is a pretty volatile situation right now. We don't know what's going to be happening next. I wonder about your advice for investors in this scenario, and if you think the Russia-Ukraine situation is something that's going to continue to have a long-term impact on gold. Because, sometimes we hear that a geopolitical event can have a short-term effect, but not so much over the longer term.
Yeah, I think that's right. I mean, I think, I always suggest to people that they should have a permanent allocation to gold in the portfolio, and that's largely as a defensive element. It's not a risk asset. It's not something that people should buy thinking it will make them a huge amount of money. It's more to provide ballast in the portfolio against more risky assets such as equities and bonds. But I think, leaving all of that aside, clearly we've been saying to people, to clients, to other investors, that people should be positioning portfolios for a higher inflationary environment, and therefore should be hedging against those risks. And one of the key ways, and one of the most effective ways to do that, is by holding gold. So people, I think, that have been doing that are positioned well. But clearly, when you get a geopolitical event such as this, somewhat unexpected in many ways, it really sort of, I think, shows or demonstrates the value of having something like gold in the portfolio that's uncorrelated to almost anything else, but particularly to equities and bonds, and where you can have a sell-off in the equity market, which for most people will be the bulk of what they have in their portfolio. That's where really gold, shines as an asset in the portfolio.
Right. And I know we've been talking about inflation probably now for the past year or so quite extensively, and talking about how people should have gold in their portfolios to hedge against that. Do you think that this event, these current events that are happening right now, have catalyzed more people to take that stance? Because I know we've had conversations around inflation is here, people may not be noticing as much. What do you think on that?
I think so. I think we were in a situation before the war broke out where, the uncertainty, the volatility that we've been experiencing in the market since the beginning of the year, was probably going on longer than people initially expected. I think at the beginning of the year, we had some volatility, a sell-off mostly affecting, tech companies as interest rate expectations sort of ratcheted up for the year. Interest rate rises, I should say, expectations of rises. And really that was kind of the main story, but I think most people thought that that was a shorter term effect, and that the volatility would subside shortly thereafter. But the longer that kept going on, the more gyrations that we've seen in the market, I think the more people started to grow uneasy about the sort of medium-term outlook and whether actually we'd see a slowdown or not. Earnings were for the most part pretty strong, here in the U.S. And so a lot of companies are still in good shape, but I think people are nervous about the interest rate rises and expectations and what impact that will have given the high inflation that we're seeing. But throw in the situation with Russia and Ukraine on top of that, I think it made people even more nervous about the current market environment.
Yeah, and you're beginning to touch on the next topic, which is, of course, interest rate hikes from the Federal Reserve. We have their meeting coming up quite soon in just a couple of weeks where we're expecting to hear about interest rates. So I want to get your thoughts on what you expect to see during that meeting, because I know that's a big thing that people are wondering right now.
Well, I think, maybe one part of it is probably clearer than it was certainly a few days ago, and that's, the chair made very clear, or at least seemed to signal to the market that he would be in favor of a 25 basis point rise, or 0.25% rise, as opposed to, I think, what most market participants thought at least a week or two ago, which would be a 50 basis point or 0.5 percentage point rise in rate. So I think that's probably more certain, or the most likely outcome at this stage, that we'll get a 0.25% rise. And then we'll have to see what happens in terms of further rises for the rest of the year.
Yeah, we will have to see. And I've heard so many different opinions on what the path is for the Fed in 2022. Do you have any thoughts that you could share on that?
I don't think mine at this stage won't deviate that much from the general sort of market expectations, which is sort of 4 or 5. I think really the key thing here is, again, with the situation with Russia and Ukraine, with the economic sanctions that have been put into place, the key question is, with the inflationary environment that we have right now, how will all of this impact growth? And that's really going to be the key as to the velocity of rate hikes, or the trajectory of rate hikes this year. Because if the Federal Reserve gets confident that growth is slowing down, for example, they'll be less inclined to hike rates perhaps as aggressively as they were thinking towards the beginning of the year. Consequently, if growth continues to be robust and inflation continues to be high, we might see those rate hikes, or even more perhaps than expected. So I think you'll really keep an eye on what happens here with growth as to the driver of whether we see more or less hikes for the remainder of the year.
Yeah, so definitely a lot of uncertainty, and it all does relate back to inflation, I think. And I wonder if you can talk a little bit more. These are very uncertain circumstances, as you really emphasized. What can we expect to see from gold over the course of the year?
Well, I think that the gold price, in many ways, now that it's starting to price in the fear factor that exists in today's market, I still think that the outlook for gold is positive, not just for the remainder of this year, but I think for the foreseeable future. And the reason for that is really quite simple, which is, inflation typically, once it starts and once you get a high amount of inflation, it's very difficult to contain. And from that perspective, I think that what's happening now is we're sort of almost piling on to that with different pressures that will sort of exacerbate that effect, particularly among energy, or with energy prices. So at the moment, with volatility, the highest it's been for some time, I think people are starting to think more defensively about their portfolios. So the more people that are buying gold and putting that in the portfolio, the more that creates demand, for the metal. And all things being equal, more demand should lead to higher gold prices.
Yeah, and let's go beyond gold and talk about the impacts of Russia and Ukraine on some of the other commodities right now. I want to touch first on palladium, because Russia is a major producer of that metal. And I know that questions are starting to be raised about the supply situation and what might happen there. So what are the key points that you think investors should be aware of when it comes to palladium right now?
Well, they're not just a major producer, they're the major producer, the largest producer in the market, with about 40% market share. And so the problem simply is this, that you're producing a commodity that the world desperately needs, particularly the automotive sector, where palladium is used for catalytic converters. But yet, if there's bans on flights, so for example, Russian aircraft banned from US airspace or European airspace, how do you get that metal from the country to the destinations that it's supposed to go? And so already that's leading to spikes or reaction in the price, because investors are fearful or anticipate that there will be disruptions to that market, which at the moment are manifesting themselves in materially higher prices accordingly.
Okay, and platinum as well. That's another one that Russia is a big producer of. Do you have similar expectations in that case?
Yeah, similar things happening with platinum, where Russia's number 2 in terms of global producers. So they produce about 10% of the world's supply for platinum. And again, same story, that that's a metal which is used in catalytic converters, just like palladium, but with air travel severely curtailed or completely shut down, that how do you get that metal? How do you move that metal from Russia into the markets where it's needed most? And so again, there's a huge amount of uncertainty around what's going to happen, how long this is going to be in place, and whether if Russia's cut off for all intents and purposes for the foreseeable future, what that might do to prices. And we could be looking at materially higher prices for both of those metals.
Right, and the price impact is one that everybody wants to hear about, and of course, again, this is very uncertain, but do you think that we could see maybe other countries stepping up to supply end users if circumstances continue the way they seem to be headed?
Yes, but the caveat is always that when it comes to mining, it's not something that you can just turn on supply, and that's why for example the gold price or the gold market, supply is always roughly constant, and you can't really grow supply in a way that you can, say, print money. And so that's why gold and other precious metals people talk about as store of value, because the store of value comes from the fact that you can't really engineer their supply in a way like you can do with money. And so from that perspective, yes, clearly other countries could put more production onto the market theoretically, but that's going to take a long time. That's not going to happen overnight. And even then, it's difficult to really see who would be able to step in and sort of fill that void, so to speak, with supply.
Yeah, I think definitely investors know all too well about the mining industry, as things don't happen quickly when it comes to supply. So I had all these questions for you about gold, platinum, palladium. You mentioned to me before we started talking that we really need to talk about the impact of what's going on in Russia and Ukraine on the entire commodity space. Of course, it goes well beyond those 3 metals. So I wondered if you could give me your quick thoughts there. What else should we be paying attention to here?
Well, I think that the oil price and the commodity space more broadly is probably the biggest talking point, outside of the metals that we've already discussed. And the reason I mention that is because broad commodities is probably the best trade so far of this year in terms of price performance, and that's holding a basket of commodities, a commodity ETF, or that represents the 23, 24 largest commodity futures out there. And the reason for that is, again, these inflationary pressures that we've seen, rising energy prices, rising raw material prices, agricultural prices, but commodities have been rising across the board, and then have only been exacerbated by what's happening with Russia and Ukraine. And so oil prices we speak today, are a multi-year high, going way above $100 a barrel, and that really, along with natural gas and with other commodities, particularly on the copper, nickel, aluminum side, again puts commodities firmly in the crosshairs for any investors looking to hedge themselves against these inflationary risks, because those are some of the most important inflationary pressures that we're seeing, not just in the market, but in the world at the moment. And so providing a hedge or trying to hedge against that, people are buying directly into the commodities market. And so, yes, there's stories about gold. Yes, it's about platinum, palladium, but more broadly, it's about oil, the energy complex, and the broader commodities market as well, which really I think people are focusing on right now as the sort of number one way to hedge against inflation.
Right. And so, of course, what people will probably want to know as they hear this information is what way should you try to get exposure to this? I know each individual investor is different. People have their own goals, but if you have a situation like this where the broader commodities complex is set to perform well, how would you be approaching that yourself?
So unless you've got a specific view on an individual commodity like gold, for example, probably the easiest and simplest, most effective way to do it is just to buy an ETF such as the GraniteShares broad commodity ETF, the ticker symbol COMB or COMB. And that's specifically designed because it holds exposure to 23 of the largest commodities out there, and it is really like think of it as like an S&P 500 for the commodity world. And so you get that exposure at very, very low cost, but with one ticket or one trade, you can own all the major commodities in the world in a portfolio.
Okay, makes sense. And I think maybe we'll wrap up with what I think is hopefully a fun question. Do you have a particular commodity that you are the most bullish on for 2022, which I am sure is hard to choose given all the circumstances going on right now, but I'm going to ask you anyway.
Well, I think probably before, certainly the Russia-Ukraine situation, I would have said oil. And the reason for that is we're just in a situation where the global economy wasn't fully open. Oil still is the commodity that we consume, most of. And I thought that, okay, if we got to, $90 a barrel in a market where we still have major economies like China, which is effectively closed to the outside world for travel purposes, that we could see a higher oil price in a fully open global economy. But I think now with the situation with Russia and Ukraine, yes, I still think that benefits the oil price and has benefited oil tremendously. But I think it's some of these metals that are really affected by this crisis and by the isolation of Russia, which most likely I think will do the best if you're talking about pure price performance, with the likes of palladium, platinum. There are other metals as well, which Russia is a major producer of, such as nickel. So those are probably the things to keep an eye on, I think, certainly in the short to medium term.
Okay, perfect. Well, I think we'll wrap it up there. Thank you, as always, for coming on to talk about what's going on, particularly in times when things are changing very quickly.
Yeah, thank you so much for having me. Pleasure.
Great. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Will Rhind with GraniteShares.